Hi there, welcome to Kneppy Invest. Time for another portfolio and technical update. In the first half of this particular video, I'll be doing a portfolio update. So I'll be looking at the performance of my three portfolios, and each of these portfolios use a different investing strategy. Compare it to a benchmark, so we can compare the performance of these portfolios to the benchmark and also to the other portfolios. So we'll talk about that a little bit more later in the video, and hopefully this section of the video will be quite quick, brief, because not much has changed from 1 week ago, apart from one purchase I did make during the week, and that purchase I put into the long-term portfolio. In the second half of the video, I'll be doing a technical update. I'll be looking at charts of indices, commodities, bonds, and 10 individual companies listed on the ASX. Also have words of the day. The two words of the day are pattern recognition. Now, in my professional job as a meteorologist, and I've been a professional meteorologist for about 20 years now, pattern recognition is highly important. It's one of the reasons why more experienced weather forecasters tend to produce much higher quality forecasts than inexperienced weather forecasters, all because of pattern recognition. In fact, my next shift is on next Saturday, so 6 days from when I'm recording this video. And if I start that shift and I see a very similar pattern than what I've seen in the past, my job is much easier on that day, because even though history doesn't repeat, it often does rhyme. So that's why pattern recognition is highly important in meteorology. But I've come to realization over the past 6 months that pattern recognition is highly important when it comes to technical analysis. And in fact, I think it might be underappreciated by even chartists themselves, how important it is. And I have seen similar patterns play out over and over again over the past 5 years or so with similar outcomes. Not always the same, because again, history doesn't repeat, but it often does rhyme. And the way I look at it is, if you understand pattern recognition and can see the same pattern play out over and over again, you significantly increase your chances of success. Just like a highly experienced weather forecaster has much higher quality forecasts than an inexperienced weather forecaster. The same is true the more experience you have looking at charts. So hopefully I'll talk about a little bit more about that when we look at those 10 individual companies listed on the ASX. Now on to the performance of my three portfolios, comparing it to the benchmark, also comparing the performance of these portfolios to the other portfolios. So first stop here is a long-term portfolio using a traditional buy and hold approach. So buy high-quality companies, or find high-quality companies, buy those high-quality companies, and then hold them as long as possible. This is the sort of strategy that is taught to everyone these days. There's only one strategy out there. Use this strategy. Find those high quality companies and buy them and hold them for as long as possible. In fact, I'd say 90% of people are taught to use this strategy. Now, the question is, and this is a topic of debate, in my opinion, not all investors are suited to using this strategy. And it's up to the individual investor to find which strategy suits their personality. And that's one of the reasons why I'm doing this particular project. Now, the performance of these portfolios are from the start of the financial year. And the main thing I'm looking for here is outperformance, significant outperformance compared to the benchmark, which is the STW or the ASX 200 ETF. I want to see my portfolios at least double the benchmark returns. So at this point in time, they're all easily beating the benchmark, because the benchmark at this point in time is down 0.12%, while my long-term portfolio, this portfolio consists of high-quality companies that I want to own for as long as possible. This particular portfolio is up 1.1%. Now, I did make one purchase during the week, and that purchase was put into this portfolio, and that company is Novo Nordisk, which is listed on the Danish Stock Exchange. I'm pretty sure it's also dual listed on the New York Stock Exchange as well. Now, at this point in time, I own companies listed on 5 different exchanges. That's why I have a currency gain here. In fact, my currency gain is pretty good, up 2%, because Australian dollar has been weak. compared to most of the currencies around the world. And that currency gain has really helped the performance of this particular portfolio. So at this point in time, I'm okay with the performance of this portfolio. I would prefer it to be doing a little bit better than 1.1%. Now to my medium-term portfolio. So this is probably using my favorite, almost my favorite strategy of looking or searching for smaller companies, companies that have potential to grow into much bigger companies in the future and have the potential to transition into high quality companies. So there is that possibility that some of the companies within this portfolio will be transitioned to my long-term portfolio. And then a few companies, in fact, for instance, Audinate, Johns Lyng Group. Now, I actually do expect the performance of this portfolio to have a better chance to significantly outperform the market than my long-term portfolio. And the reasons behind that is if I pick and choose the right companies, then those companies have a greater chance of giving me much better returns than the best quality companies in the world, because these companies are small. And that is playing out exactly as I think it will, because the best performing companies in this portfolio so far are significantly outperforming the best performing companies in my long-term portfolio. In fact, you have 6 companies that have given me over 40% returns so far in this financial year. Now, on the flip side, I also expect the worst performing companies in this particular portfolio to perform worse than the worst performing companies in my long-term portfolio. But at this point in time, the worst performing company in this portfolio is only down 26.4%. So I'm very happy with the performance of this portfolio, up 5.72% compared to the benchmark, down 0.12%. So nothing to complain about the performance of this portfolio just yet. Now on to the third of my portfolios. And this is using a technical analysis strategy. And I keep making mistakes when it comes to this strategy. I was going to sell 3 companies that I have in this portfolio on Friday, which was the 13th of, or Black Friday, the 13th of October. But the overall market was down and none of my sell bids was hit. So I'm still holding those 3 companies. And those 3 companies were Australian Ethical, Wagner's, and James Hardie. But this portfolio is significantly outperforming the benchmark. In fact, it's outperforming or significantly outperforming my long-term portfolio and outperforming my medium-term portfolio as well, up 8.82% compared to the benchmark, down 0.12%. So nothing to complain about when I'm talking about the performance of this portfolio, even though I keep making mistakes. If I cut out those mistakes or limit those mistakes, I think the performance of this portfolio could be above 15%. Yes, I said that right, above 15%. So potentially, I am more suited to this or using this sort of strategy. Remains to be seen if I could maintain this sort of result over the longer term. Now on to technical analysis. But before we have a look at technical update, I'm going to show you something really interesting. And every single Saturday, what I do is I go through all the charts of companies within my watch lists. And every single week over the past, say, year and a half, I've seen very similar charts. Companies that are in downtrends, not many companies whose share price are in uptrends. And what I found on Market Index, the website, the other day, in the stock scan section is 52-week highs and 52-week lows. So if you click on the 52-week highs, you can see the companies that are a 52-week high on the most previous or the most recent trading day. So on Friday, at the close of trading on Friday, only 5 companies were at the 52-week high. And one of these companies has a market cap of $8 million. The other companies are Origin Energy, Sky Network Television, Strickland Metals, S2 Resources, and IP Petroleum. So only 5 companies on the ASX are at their 52-week high. This is with companies with a share price above 1 cent. So again, 5 companies are at their 52-week high. So let's compare it to those companies at a 52-week low. And there's a big difference here. In fact, I had to press on show all companies. It's a plethora of companies that are at their 52-week low at the end of trading on Friday, the 13th of September. Now, the reason I'm showing you this, because I've been looking at this over the past few weeks, and we've seen similar things each and every day. Not many companies at the 52-week high, but a lot of companies at the 52-week low, which tells me, even though someone said on Ausbiz The Call the other day that we're in a bull market right now, we're not in a bull market right now. You would not see this sort of thing if we were in a bull market with only 5 companies at a 52-week high and a plethora of companies, maybe 100 companies at a 52-week low. So if anything, we're in a bear market right now. Most companies' share price are going down and they're in down trends. The biggest company that are at the 52-week low is ResMed. Then we have Amcor, Australian Financial Investment Company, Aurora, Air New Zealand, Centura Capital, Chalice Mining, Regal Partners, Arafura Rare Earths, GDI Property, Centuris Metals, Aroa Biosurgery, Garda Property. In fact, there's a lot of REITs here, seems like. So anyway, so it's really interesting to see what I saw here. A lot of companies, the charts or share price are 52-week lows. And when I went through all the charts, it was just one bad chart after the next, particularly small cap companies. So when we look at the XJO, you won't see it won't be as bad as what you see on the XGO. And one of the reasons behind this is because when you look at charts of the banks, Woolworths, maybe not CSL, but the biggest companies on the ASX, their charts don't look quite as bad as some of the small cap companies. And that's one of the reasons why the XGO doesn't look as bad as it could. But still, the XGO is going sideways. It did bounce off a nice support zone. That zone is between 7,000 and 6,900, but a little bit of weakness on the Friday. So very interesting to see what's going to happen on Monday. I think the NASDAQ was down, so there's potential we will see a little bit more weakness in the ASX 200, although the Dow Jones was up. And I think those bigger companies on the ASX, those defensive companies, those banks, they're big miners, might actually have a good day on Monday, particularly those miners who are mining gold and US oil. Well, not oil, US oil, but oil. And we'll have a look at those commodities charts in a second. Now, I also want to look at their small cap index. So this is small ordinaries. It does look much weaker, more bearish, the XJO. In fact, this has been a downtrend. The XSO has been a downtrend since the start of 2022. And if it falls through 2,600, that would be a very bearish signal for the XSO. So there has been a lot of transition of funds from smaller companies into defensive and those big companies because of fears what's going to happen in the future. And that's why a lot of small cap companies on the ASX, their charts look absolutely dire right now. It could be a good time to buy those companies because some of those small cap companies valuation are looking really intriguing right now. NASDAQ, a down day on the Friday after a pretty good week, down 1.24%. In fact, we could draw a downtrend right now. Yeah, we can draw a downtrend. Yay! So get the high and it bounced off. You can see it if I draw that line there. So just linking 2 highs. In fact, almost 3 highs here. In fact, 4 highs. 1, 2, 3, 4. And it looks like it's now bounced off. And once I bounced off to the downside, off that trend line. So now 5 times the NASDAQ has hit that downtrend. So potentially the NASDAQ is in a downtrend right now. If I see this downtrend line broken, that'll be the end of the downtrend. But anyway, so it's really interesting to see that we can put a downtrend right now that had started in July. So that's really all I'm going to talk about when it comes to indices. Now on to commodities. And there's some really interesting charts when we look at commodities, particularly gold and US oil. The first one here is iron ore. Always look at iron ore. This is probably one of the most important charts to look at because iron ore is highly important when it comes to Australia and a lot of companies on the ASX. So BHP, Rio Tinto, Fortescue, and nothing to complain about iron ore prices right now. There's been a lot of speculation that iron ore prices will collapse because of China, but hasn't collapsed yet. And I'm not sure if it will collapse. So if iron ore prices stay at these levels, that'd be actually pretty good for a few companies I actually do own. So neither bearish nor bullish when it comes to iron ore. Uranium has had a few negative week. Yeah, so I did have a negative week, but just a pullback because of a stellar run it had. It's very healthy to have this little pullback after an exponential rise in the price of uranium prior over the prior 1, 2, 3, 4, 5, 6, 7 weeks. So this is the weekly chart. And you can see in the past, we've had the similar run up in uranium prices and the pullback. So this is a very healthy pullback for uranium. I wouldn't complain at all or be worried at all if I was owning any sort of uranium companies on the ASX or internationally or even the ETF. Now onto oil. So oil was actually we have to look at the daily chart, not the weekly. So oil has been quite volatile over the past 2 weeks, and oil was up 5.1% on Friday, and that was a nice bounce. So we had a nice bounce off the longer-term moving average. So that's this moving average channel here, or ribbon here. So oil is in an uptrend, and we've had a little correction in oil, and now possibly it's bouncing again. I almost took a position in Karuna Energy. That's probably my favorite play when it comes to oil on the ASX. Lithium has been a downtrend forever. We've had numerous down weeks. We haven't had an up week since. Was it an up week? No. We haven't had an up week since June, 26th of June. We've had, 10 down weeks, 12 down weeks in a row. Keeps dropping, keeps on dropping. Even though it keeps on dropping, there's still a little bit of hype within the lithium sector, even though it keeps dropping. I don't know what's happening. Gold had a really good day on Friday. Look at that. So a lot of weakness in gold from the 25th of September to the 5th of October. It fell a fair bit, looked fairly bearish, and then gold has just zoomed higher. Pretty sure this happened on Friday. So you might see pretty good price action for Australian gold mining companies on the ASX. I own two. Actually 3 gold miners right now, 1 producer and 2 explorers. And hopefully we'll see some good price action for those mining companies. And where gold is right now is at a pretty good level. It's probably at a resistance level at around or just under 1940. So I'm not sure what's happened with gold over the last week, but its sentiment in this commodity has really shifted quite quickly. Copper, on the other hand, remember everyone saying copper was the next lithium or something? There was a disconnect between the supply and demand. But if you look at the chart, it wasn't telling you that. And in fact, the copper chart, I don't own any copper companies right now. I saw the last one. Actually, I do own one, but that's an exploring company going to production soon. And copper is at a very important level at $3.56. Nice. That's I wouldn't say a strong support level, but it's an important support level. If it drops any lower than what it is now, that would be a bearish signal for copper. Dr. Copper, it tells you the state of the economy. So maybe this is telling you, everyone, that the economies around the world are fairly weak right now and have the potential to become weaker. Coal, actually, I won't talk about coal because it's not that interesting right now. Bonds have been very volatile over the past few days, or say week or so. In fact, if you look at the 30-year American, it was down 2.8% on Wednesday, up 3.5% on Thursday, and then down 2.1% on Friday. I don't know. I don't think the bond market knows what's going to happen. Volatility is just uncertainty. A lot of uncertainty right now in bond markets. Same thing is true for the Australian 10-year. A little bit of volatility, but not as much as the Australian. And I do have the TLT ETF, which is the 20-year Treasury bond. You can see it's in a downtrend, which is understandable because prices and yields are conversely related. So if yields are going up, bond prices should be going down. So the time to buy bonds is when at the peak. And you buy bonds, and as bond yields go down, prices of the bonds should go up. And it all makes sense if you think about it. I won't talk about why it makes sense in this particular video. If you don't understand why there's a relationship between bond yields, an inverse relationship between bond yields and bond prices, just leave your question in the comment section and maybe I'll do a video on it. It's actually quite intriguing. Now on to individual companies on the ASX. I have 10 of them. I think 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have Crisis Corporation, Gentrack, Cobram, what's it called? Cobram Olives. company called Light and Wonder, Sonic Healthcare, Ansell, Mesoblast, Next Science, Chalice Mining, and Perseus. 2 gold mining companies there. Okay, I totally forgot what companies I chose. Okay, so Crisis Corporation. I almost sold this in July at $4.70. Share price now $6.55. I'm so happy I did not sell. No reason to sell. And the reason I've decided to include this company, not only do I own this company, the share price for some reason increased 5.8% on Thursday and is at an all-time high. Yeah, it's just a really good-looking chart. This is one of the rare, really good-looking charts on the ASX. There are a few good-looking charts, but when the market is in a bull market, you're going to see a plethora of really good-looking charts. When the market is not in a bull market, arguably in a bear market, when you're talking about small cap companies, these type of charts are fairly rare. So enjoy it and just go on the ride. Just enjoy the ride if you are a shareholder. I don't know why has been a lot of interest. Well, I do know why. There's a lot of potential with this company. And another really good looking chart, another company I do own, though I have taken profits along the way, and maybe I should have. That was maybe my mistake with this company, is Gentrack. This is a beautiful looking chart. So I bought this company, for those who have not heard me talk about this, I bought this company back here. It was a technical trade in May 2021. You can see share price going sideways for a long period of time, and then it did look like the share price was breaking out here. So I bought shares, I believe it was $1.40 or something like that. I forget exactly what share price I bought. And then it took a long time for the real breakout to happen. Share price fell all the way down to $1.20 back in September 2022. But then look at that breakout. This was on good news, some good volume coming in, and that was the sign. This is one of the patterns that I do look at or look for all the time. This sort of breakout on high volume. The other thing I'm looking for is a breakout on high volume on positive financial news. That's the pattern recognition thing I am talking about. And it was on this day where we saw the really good breakout, the 30th of November 2022, broke above this resistance zone right here. You can see what the share price did after that. Keeps on increasing. So a beautiful looking chart. I took profits somewhere here. I took profits up here, and I'm not going to sell any more shares in Gentrack. I've done with profit taking. Nice pattern here that I've seen play out very similar time and time again in the past, no matter the state of the overall market. If a company releases a positive financial announcement, and if the share price is at least a 6-month, preferably a 1-year high, so with Gentrack, when the share price got above, what was it, $2.05 or something? When the share price got above $2.05, the last time the share price was at level was about 2.5 years previous to that. So it was a 2.5-year high. And when that happens, when you have a breakout and the share price at a 2.5-year high, there's much less resistance moving forward. That's why the share price has moved into an uptrend, much less resistance. So that's an example of pattern recognition. Cobram, is it Cobram or Cobram? Estate Olives. This is a potential pattern that I'm following. Now, what I do, these ribbons, these moving average ribbons, they tend to be resistance or support zones. I think that there will be a company I'll show you where a very easy to see resistance zone, I think it's Next Science, which will be able to see why and how that moving average ribbon can be a resistance zone. So Cobram Estate Olives was in a well-defined downtrend. Whenever it got into the long-term moving average, which is the moving average ribbon with the blue line in it, which is the 150-day moving average, we saw some selling, saw the share price move down. Happened a few times in the past, but it hasn't happened again. And the share price looks like it's turning around. We've started to see a pattern I've seen play out a few times in the past. It's not a very strong pattern, but it looks like the end in the share price downtrend has come to an end for Cobram Estate Olives. And there could be a new uptrend developing soonish. Wouldn't be surprising to see the share price go sideways, but this is a chart I have put onto my watch list just because of what's been happening with the share price over the past few weeks. It could be turning around. Light and Wonder Inc. I don't know anything about this company. It was really surprising. I don't know anything about this company, yet the market cap is $11 billion. $11 billion. It listed on the ASX in May, and the share price just went up. It listed at about $90, and share price went to a high of 122 and has pulled back. This could be a buy the dip situation. I'm going to have to do research on Light and Wonder. This must be an American listed company that has dual listing for some reason. I don't know. Something to do with gaming. SciPlay and iGaming. Company is founded in 1984 and is headquartered in Las Vegas. I wonder if it does have dual listing. Anyway, so this is just a newly listed company on the ASX. And one of the things I am looking for is IPOs. And I want to see over 6 months, the first 6 months, the company has been listed on the ASX. I don't want to see the share price in a downtrend. I want to see the share price in an uptrend. And if I see a profit upgrade from that newly listed company, that is a pattern I do see quite often. And that is a buy signal. But I don't know if Light & Wonder has released any profit upgrade. But this is the sort of chart I'm looking for in a newly or recent IPOs. You don't see many of these sort of charts of recent IPOs. You don't believe me? I have an IPO watch list, and I can go through all of them. Well, Biome is a little bit different. But if you go through all these charts, a very similar pattern you will see. They're all in downtrends. Not all. We'll say 90% are in downtrends. That one isn't. Global Data Center. That's a nice looking chart. But the majority of these recent IPOs, when I say recent, I'm talking about the last 3 years, the majority of these charts are in downtrends. Yeah, you see this pattern time and time again. So patterns are everywhere. Everywhere. Sonic Healthcare. Why did I include this company? Oh, yeah. Okay. Another interesting, maybe not pattern, but I do look for resistance and support zones. And if we look at the weekly chart for Sonic Healthcare, I would probably call this a high quality company. And you can just see the high quality of this company just by the chart. The weekly chart, share price in an uptrend. There have been times of weakness like during the COVID-19 financial panic. And post vaccines, this company was positively affected by COVID-19 initially and then negatively affected. And we had to see the share price fall a fair bit from its peak. But it's still a high quality company that's just working through these headwinds. And the share price has reached a fairly important support zone. You can see the share price in February of this year, and if we go to the daily chart, you can see that in February this year, the share price fell below $29 and then recovered fairly quickly. Recently, on the 5th of October of this year, the share price bounced off $29. So it's bounced off this zone of support. So the share price of Sonic Healthcare right now is at a good support level. So if you like the future of this company, maybe the worst is in. Maybe the share price won't go much lower than what it is now at $30. And if the share price falls below $28, a simple sell, stop loss, that sort of thing. Although this is a high quality company, and I'd say maybe 10 years time, the share price probably will be higher than $30. And the same thing can be said for Ansell, although I probably would say that Sonic Healthcare is a better quality company than Ansell. But Ansell, when we look at the weekly chart, has another really important support zone at around $21. And this support zone goes all the way to 2017. So we're talking about 6 years ago. Share price has hit $21 once, twice, 3, 4, 5 times in the past, and the share price is just above $21 at $21.88. So there is possible buy situation right now for Ansell. And if the share price falls to say $20 and stays below $20 or around $20, that could be, again, another stop loss or sell situation. So Sonic Healthcare and Ansell are just looking interesting because of where share price is right now compared to historical support zones. And again, I will buy these type of companies, high quality companies, when I see some value and when the share price is at support zones. It's not true for Mesoblast. I just decided to include Mesoblast because of an update. I just wanted to update Mesoblast. Yeah, nothing much happening with Mesoblast. So the share price fell, was it 57% on the 4th of August, and it kept on falling. Then we saw a nice little rebound. What happened to that rebound? Just have a look at that rebound. So share price went back up to the share price it fell to on the 4th of August, and then went back down again. So around about 48 cents. We'll say 50 cents. I'll pull this line up a little bit more. So we'll say between about 52 cents and 47 cents is a resistance zone for this company. And we saw a lot of selling coming in when the share price rebounded to that zone, and the share price keeps on falling. Now you could say 34.5 or around 35 cents is a support zone, because share price fell to that level on the 9th of August and rebounded. It fell to that level on the 6th of October, and we did see a little bit of a bounce. So potential that that level is a support zone, but overall negative sentiment in this company and the share price in a downtrend. I wouldn't be surprised to see the share price fall below 35 cents, maybe not permanently, but for a long period of time. I have no interest in taking position in Mesoblast at this point in time because of the negative sentiment. Next science. Oh, the reason I decided to include this is just to highlight how important resistance zone is. Now, not all companies will have the same resistance zones, that sort of thing. So I'm suggesting in this particular, or for this particular company, the long-term moving average ribbon I have here, and this is shown, for those who don't know, I've got it here. That's not it, inputs. So my two moving averages I use for the resistance or long-term resistance or long-term moving average ribbon is 125 and 200 days. And I put the blue line in the middle of it, which is the 150-day moving average. So that's my long-term moving average ribbon. And if you look at Next Science chart over the past 2 years, whenever the share price gets into that long-term moving average ribbon, you see the share price fall away. It's happened once in February 2022. It happened in August 2022. You can see the share price temporarily went above that moving average ribbon, but only temporarily, and then it fell back. It moved into that zone in February 2023, and again in April 2023, and then again in August 2023. So it's on about 1, 2, 3, 4, 5, 6 times in the past where the share price has moved into that zone and then fallen away. So that's a very definite resistance zone for this particular company. Now, this moving average ribbon, the long-term moving average ribbon, is not necessarily a resistance or even a support zone for all companies. So each company has their own voice. You have to look at each company's chart individually, determine resistance and support zones. You can't use the same rule for every single company. So for this company, that zone or that moving average ribbon is a resistance zone. And for the future, if I see that zone broken, if the share price gets above that moving average channel or ribbon, whatever you want to call it, that could be a sign that the sentiment has shifted and the trend in the share price is starting to turn. Hopefully all that makes sense. Chalice Mining, or why do I want to include? Oh, this was a hype stock. Let's go back to 2020. I just wish I was following this company a little bit more closely, because the shares of this company broke out. You can see it breaking out on the 23rd of March 2020. So right in the middle of COVID-19 financial panic. Share price on this particular day rose 137.5%. They would have released something really important on that day. And just look at the rally in the share price. And this is why volume is really important. You should never care if a share price rises 137% in one day. Don't care. Don't say, well, it's risen 137% in one day. How much more further has it to rise? It can't rise much further. It's already risen 137%. That's a wrong way to look at it. New information means the story has changed for this company. I don't think this company is a gold producer just yet. No, it's still exploration. And that was a change. You could have bought shares on that day, we'll say the next day, at, say, 30 cents, even though it rose 137% in one day. And then you could have sold at $9 a year and a bit later. Yeah, the share price of this company went from 30 cents on that day where it broke out to $9. That's a 30 bagger. in about 15 months. But stories change for this company, and look at the chart now. So this is a negative looking chart. Massive volume coming in on the 30th of August. Share price dropped 25% on that day. So some negative news obviously has come in, and things have changed. Story has changed for this company. So you could have sold at $9 and ridden it all the way down to $2.11. Still significantly higher than 30 cents, but the share price in the downtrend right now. So hopefully any shareholders who bought during this massive hype phase back in 2020 have already sold out. And if they haven't, unfortunately, share price is significantly down. And Perseus, why Perseus? Oh, I think I'm interested in this company. If you look at the weekly chart, so if you look at the daily chart, it looks pretty negative. Share price in a daily downtrend. Share price almost at 1 year low. So last time share price was this low was back in October last year. Doesn't look that good, the daily chart. But when you look at the weekly chart, you get a different perspective. Okay, so this is the daily or weekly chart going back to 2019. And you can see the breakout in this chart as well. So the breakout in this chart happened around the 17th of June 2019 on higher volume. And this is the weekly chart. I wonder if there's a breakout on the daily chart as well. Let's have a look. Was it the 19th of June, 17th of June? Yeah, here it is. Breakout. It happened on the 20th of June 2019. Share price rose 21% in 1 day on pretty big volume. That was a breakout. The share price kept on going up. But the reason I want to include this is you get a bit different perspective depending on the time frame you're looking for. When I say time frame, look in the daily chart, weekly chart, or whatever, and you can see the share price has dipped back to the longer term moving average. In this case, we're talking about the 125 to 200 week moving average, and the blue line is a 150 week moving average. So we have seen the share price pull back to that longer term moving average a couple of times in the past, and that was a buying opportunity. And that's where the share price is right now. But it does look a little bit weaker, and the share price looks like it might be falling below the longer term moving average, and the shorter term moving average has turned red. Now, the last 2 times we saw the dip, the longer term or the short term moving average did not turn red. So this is a little bit more bearish, maybe not a little bit, but definitely bearish than the other 2 dips. Now, another reason why I might be interested in this company is just the valuation. I'm pretty sure Perseus Mining has operations in Africa, and there is that sovereign risk, but I'm willing to take that risk. Operates through the following segments: Edikan, Sizinju. Yeah, that's definitely in West Africa. Doesn't talk about, doesn't say where its operations are, but those words are definitely African. And it looks interesting value. It has company has a price earnings ratio of 5.2, dividend yield of 2.3, market cap is 2.2 billion, revenue of $1.4 billion in 2023, profit of 427 million, good growing revenue over the past 5 years. So maybe, because I haven't done as much research on this company, maybe the end in growth has come for this company. Maybe that's why the chart is looking weak at this point in time. And the time is 3:51 p.m. on Sunday, and that's all I got for today's video. If you have any questions about pattern recognition, anything about anything I've shown you in today's video, I'd love to hear from you. So leave your thoughts, your questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.